Thank you. So what makes me better than a banker? So just to document it, I've been at the Glendale School Credit Union. I'm the CEO. I've been there 18 years. We have had no foreclosures for 18 years. We never did subprime interest-only pick-up payment loans. We didn't foreclose on anybody's home. See, this is the distinguishing difference between credit unions and banks. What we've experienced over the last several years is reckless lending by banks that has caused this economy to collapse globally. We didn't participate in that. I'd like to say if the banks behaved the way we behaved, we wouldn't be in the predicament we're in. But I'm not going to belabor that point because you guys are living it, unfortunately, as my son and daughter, who just graduated college, are experiencing it now in a tight employment market, in a terrible labor market. Even with degrees, it's a challenge out there. I'm optimistic the economy will improve. I just don't know when. The credit union, real quickly, is $325 million in assets. Let's go on to the next one. We were established in 1937. So we're celebrating 76 years in the Glendale community. We have maintained a 5-star rating for the last 20 plus years. We have over 11,000 members, and everyone in this room is qualified to belong and participate as a member. And we offer a full array of financial products and services. So that's enough for my commercial. We're talking about building credit, so I'm going to discuss with you what is required to build credit, because I have seen over the course of my life the pros and the cons of being reckless in establishing and maintaining credit. So we'll talk about how to establish a positive credit profile. The first thing is to always pay your bills on time. Having no credit card does not provide you with a positive credit history. So you need to establish a credit record with a credit card financial institution, be it a bank or a credit union. So building a positive record will build you a positive history, and there's a benefit to maintaining a positive credit profile compared to a negative credit profile, and I'm going to get to that shortly. So without a credit record, you cannot establish a credit profile. If all you're doing is writing checks against your checking account, you're not establishing credit. So I'm going to talk about secured credit cards. Secured credit cards behave like unsecured credit cards. So the security in the credit card is what you're going to be put up, what you will put up to establish your credit line. So for example, if you were to come to the credit union with $500 or $200, we would set you up with a credit card that had that limit. Okay, so why are we doing that? You're new to establishing credit. You're a risk. Banks and credit unions are risk adverse to losses. So what we do, and we've been doing it for several years now for students, is we'll set up a secured credit card and see how they behave on the secured credit card. After they can prove by a payment schedule that they can honor it, then after a period of time we'll take off the security, release the funds, and then they'll actually have an unsecured credit card. So again, the credit card is not a debit card. Debit card transactions, again, don't build credit. So if you think of a debit card as an electronic check, every time you swipe that card at Starbucks or the grocery store, what you're doing with that debit card is you're electronically telling the merchant to take that money from your account immediately. We used to write checks. Occasionally you see people handwriting checks at the cashier's line. Now, with the technology, you can just swipe that debit card. Most people, a lot of people, don't even carry cash anymore because with a debit card, you can buy just about anything at just about any merchant. Every terminal you see has it because it just makes the transactions go a little quicker. And with the price of groceries going up, nobody's going to have enough currency in their wallet to pay for everything. So with the debit card, you can swipe it and you can drop a couple $100s before you even know what the damages are. So again, the debit card is not an extension of credit. This is why I'm recommending, that you establish yourself with a secured credit card. Because the credit card transaction, even though the bank or the credit union is holding the money on deposit and we're freezing the account, we're not reporting that to the credit bureaus. So the credit bureau sees that you have a $500 credit card, they're going to presume that that's an unsecured line of credit. So now we're going to see, the credit bureaus are going to see how you're behaving on making payments on that card each and every month. Because paying on time, it'll get repetitive here, is critical to maintaining a positive credit profile. We'll get to FICO scores in a moment because there's some huge negative consequences to not paying your credit cards on time. And you will pay for it, I can guarantee you. So I'm just telling you the truth. If you're going to establish a credit card balance, you need to make sure you've budgeted, as the speaker before me said, that you've budgeted to make the payment on time each and every month that you carry that balance. So paying on time improves your scores and keeps your score in a high number. With FICO scores, the higher the number, the better. So if your FICO score is, let's say, 300 or 400, that's a terrible number. If your FICO score is, say, 700 or 800, as we discuss in a couple of minutes, that's a great number. And people will extend you credit, and they'll extend you great rates and great terms. It's significant, especially, at some point in time, everyone in here is going to be buying a car, financing a car, buying a house, financing a house, and you don't want to get stuck with a bad rate on any of those loans. So the question is, when you get these credit cards, as the earlier speaker talked about, and we didn't coordinate these things together, part of it is you need to figure out, is it something you want or is it something you need? I think you basically understand the difference. Sometimes there's a tendency with people on credit cards to spend a little bit recklessly because again, it's not cash, you're just swiping that through the machine, and sometimes you can lose sight of the damages that you're doing because all you're doing is swiping the card through the machine. You can run through the mall and run up a huge balance on the credit card. So it's easier said than done. Don't spend more than you have. Manage your credit. The recommendation is, if you can't make the payment or pay for it, maybe you shouldn't buy it. Again, charge only what you can afford to pay. The monthly payment history is important because this is what is going to drive one of the components in your FICO score. What is the lender looking for? Yeah.
It's not a question. I just want to make a comment. A lot of students, it's okay for repeats because a lot of the students weren't here last session.
Okay. Oh, you know what? That's a good point. Yeah, I just presumed everybody was here.
If you want to repeat something, it's even better.
Excellent. Thank you. So on credit management, the thing is with the FICO score, nobody will tell you what drives a FICO score. And FICO stands for the two gentlemen that kind of invented it, developed it. Now it's become a national model. The F was for the guy's last name was Fair, and the guy's last name was Isaac, so they call it Fair Isaac. CO is the company. But And I don't know what all the parameters are, but we've figured out what a lot of the parameters are, and then each of the parameters are assigned a different value. But this is all like top secret information, and even the bank presidents don't know what it is. But what they're looking for is FICO's looking to see, are you responsible in managing your debt? And how can they determine that? Well, they can determine it if you're carrying a balance from one month to the next month. Are you making the payments each and every month? So it's not mission critical that you carry a large balance. But what is mission critical is that you make the payment each month. So even if you're carrying a balance from month to month of $100, $150, $200, it's not a huge balance, but you need to make at the minimum payment, absolutely, because that gives the credit profiling agency an understanding that these people are well disciplined. They're carrying a balance month to month, and they're making the payment each and every month. They're not looking so much as how big the balance is. They just want to make sure, are these people disciplined as debtors? Are the debtors disciplined in making the payment? And then what they're also looking at on the credit card is, let's say your credit card limit is, we'll just say $1,000, because I can do that kind of math without a calculator. If your credit card limit is $1,000, you don't want to overutilize that card by more than 50%. In other words, you want to keep that credit card limit at about $500 or less, unless there's some unusual occurrence where, you know, you're paying for a cruise and it's $1,000, you have to take the card all the way up to the limit. But what Fair Isaac and the FICO score is looking for, again, is credit utilization. They want to make sure you're not maxing out that credit card each and every month. If you carry a balance on that credit card to the limit's $1,000, and each every month you're carrying a balance of $990 to $1,000, that gives your FICO score a reason to think these people are living on their credit cards. They're not able to live paycheck to paycheck. They're living on the credit card. That actually will drive your score down. So you want to not max out your credit card. You know, if you have to occasionally, obviously Christmas, people run up their cards, that's fine. But the other 9-10 months of the year, you should be paying that card down. Like I said, the 50% is not a bad benchmark. And then the question is, how many credit cards should I carry too? Your credit profile is affected by too many applications for credit. So you don't want to apply for too many credit cards, because if you're making an application for too many credit cards, the creditors that are looking at your profile might be concerned that you're looking to do something a little bit reckless, like loading up on them and then, you know, taking off for parts unknown and not paying the creditors back. So you don't want to load up on too many cards. Again, you want to keep your payments on time, keep the maximize them at 50% or less. My recommendation is there's really not a need for you to carry more than 3 cards, 4 cards. You know, maybe keep 1 or 2 at the house in a drawer in case of a contingent emergency, you know, that comes up. You can use those cards. This works to your advantage in a way because, again, I told you not to max out all your cards all at once. So let's say you have 4 cards, you're only using 2 of them, and the other 2, the balances should be at 0. So that's showing already, even if you max out the other 2, it's showing that the other 2 at 0, again, to the bureaus, to the FICO score agencies, they're saying, oh, this person's well disciplined. We see they've got 4 credit cards, they're only using 2 of them, and they've been disciplined not to max out the other 2. So it doesn't hurt to have, let's say, 3 or 4, but you don't want to run them all at once. You don't want to max them out all at once. Yep.
You may have partially answered the question, but is there a negative consequence of having that separate card at a 0 balance, just kind of sitting there for emergencies like you said?
Not really, no. Because again, you know, even the creditor that's issuing the credit card would like you to have a balance on there because that's how they make their money. I think they recognize at some point you may have to go to that drawer, you know, and draw on it. So it's not an adverse consequence not to carry a balance on a card. I mean, I have, 4 credit cards. I only use 3 of them with regularity. I have one, socked away. Again, that's my emergency backup plan. If all else fails, I can always go to that, assuming I was to max out the 3 that I carry.
And what about paying the balance in full for a month?
Paying your balance in full
Is that points or?
yeah, I mean, paying your balance in full each month is not a bad idea. If you're,
As far as building credit, are they going to say that I'm not making money off this guy, so?
yeah, it will still show on your credit bureau, because what's happening is your bank is reporting to the bureau what your balance is on a certain day of the month. Let's say the 30th of each month. They're saying, hey, this is the balance on Joe's credit card, $1,000. Now, your payment might be on the 5th of the next month, so you pay it off on the 5th in full. You paid the bank no interest. You brought the card down to a 0 balance, but the bureau that took a picture of it on the 30th of the month saw a $1,000 balance. Next month they see the balance has gone up or down, but they're also seeing the report by the bank that the payment's been made, and the bank's reporting that the payment's been made and not late, so that's working to your advantage.
May I make a comment on that?
Sure.
May I answer your question? For years and years, over 20 years, I've been paying all my credit cards in full. My FICO score, 825.
Wow. That's awesome. You need a loan? I'll loan you money.
I know.
See, this is the serious point. I've never met you before, but if she comes into that credit union, the Glendale School Credit Union, if she comes in today or tomorrow and asks for a loan, I'm not even going to check for her income. I'm not going to verify her income. I'm not going to even inquire about where she banks, because when I run a credit report on her and I see that number, she's established and proved to me, and I'm risk adverse, right? No foreclosures for 20 years. I didn't get to that point by being stupid. I'm going to loan her money every day of the week. Now, if she comes to me and I run her credit report and the score is 400, 500 on a FICO score, she's going to have to jump through a lot of hoops, and she's going to pay a steep interest rate. But I'll loan her. You want to buy a car? I'll do her a car loan just based on what she told me at 2.5%, which is an awesome rate in this economy. Yeah.
Yeah, I just purchased a mattress, not so long ago for almost a grand, and I have the money to pay it. Now I'm wondering, would it be better just to pay that in full, like they're saying, or to make payments to show the credit reporters that I'm responsible, or what's the better?
That's an excellent question. I would take a look, first of all, see what's the interest rate on the credit card. If it's not a high interest rate, then I would make just nominal payments. What the lender's looking for is a history of time of payment. So if you could take that and stretch the payment on that 12 months and you're only paying 1 or 2% interest, I would carry that balance for a full 12 months, because that's going to show FICO that this person's well disciplined. She bought some merchandise for $1,000, and over the course of the next 12 months, she paid, $80 a month, each and every month on time. That's going to establish positive credit. It actually more positive than if she just paid it off, within 1 or 2 months. Because then, again, the lender is saying, well, yeah, she paid it off in the first 2 months, but we still don't know if she would have been well disciplined to carry it over time. And that's what they're looking for. Over time, are they behaving? And especially when you're establishing credit, that's what they're looking for, is to see that historic timeline. I say 12 months generally is a good picture. That's what we look at.
But if she's gonna spend more money the next month, then she'll keep paying it off.
Yeah, I mean, I don't know. I think, I'd like to know, is the is the credit card, is it for that specific merchant? Sometimes they're proprietary, like Victoria's Secret has credit cards just for Victoria's Secret. So you can't take that and go to Pep Boys and buy an oil change, right? So, yeah, so that kind of card for her, and she told me that the interest rate's really low, I would carry it over time. Now, if the interest rate was, 10 or 12%, I'd say, you know what, maybe make 3 or 4 payments, pay it off. It still shows positive, but you won't get ripped off paying a lot of interest. Because I don't think as a consumer, to me as a consumer, the objective is not to pay a lot of interest,
So that's what I was alluding to as far as a negative consequence of paying in full. So if you're trying to establish credit and she has a low interest rate, at this time it might be a good idea.
Absolutely.
But if you're already established, meaning you bought cars in the past, maybe you're paying student loans, then is it okay to just pay in full or something?
Oh yeah, if you've got established credit and it's a positive number, then pay your cards off each and every month. That's the ideal situation. That's the perfect world, But if you're just now establishing credit, again, you want to show that timeline. But once you've established a good score and you're disciplined to maintain it, then you can pay your credit cards off, each and every month, and your score will still be a positive number. The only thing that really drives FICO crazy is missed payments, skipped payments, late payments. Those will drive your score down really quick. Yes?
What about secure credit card? Let's say if the person is student who just started to establish his credit, or somebody arrived from the different country, they want to start, building their credit. Is that okay, starting with a secure credit card and then until they're going to get the regular credit card?
So I didn't hear most of that.
No.
But
I'm asking about the secure credit card.
about the secured credit card.
Yes.
Right. So on the secured credit card, again, like I'm saying, it's not showing on the FICO, on the credit bureau reporting, that it's a secured credit card. All it's showing is that there's a credit card out there issued in your name with a credit line of $500 or $300. So the bureau doesn't know that I issued you a secured credit card. So that's the benefit to you, as the consumer, because I'm not saying you're gaming the FICO folks, but you are a little bit, because they don't recognize that it's been what I call collateralized by your deposit. But what we do this all the time at the credit union. Other institutions do it too. And then usually after a period of time where you've documented a good history of behaving, making payments on time, they'll release the collateral, and then you'll have, what's considered a fully unsecured loan. So again, you just have to put yourself in the mindset of the lender, because the lender wants to reduce his risk. He's the one that's extending the money to you. So you have to think from the lender's perspective, what do I need to do to placate him? So one of the ways to placate the lender is to have a good FICO score. And if you don't have a good FICO score, then you need to get that first credit card established with some money as a deposit to reduce the risk to the lender. There's still some risk to the lender. I'm not going to tell you all the ways to game the lender, but with a credit card, even with say $100 limit, it's possible that you could go to the shoe store and buy a pair of shoes for $125, because the lender will give some shoe stores latitude. We'll tell the shoe store, you know what, if one of our members comes into your shoe store, we're going to authorize that shoe transaction up to $125. You don't even have to check to see if it's available. So you could actually go over your limit intentionally or unintentionally because the lender has enabled the shoe store a certain floor before they actually verify if the funds are available or if the credit line is available. But again, if you go over your limit, what's that? That's a demerit. So the lender's going to say, shame on you. I gave you a collateralized card for $100 and now you owe me $125. That's not going to endear you with the lender, because now he's thinking, now I'm at risk. If the person doesn't pay and goes into default, yeah, I'll grab the $100, but I'm still out the other $25. So you want to, on a secured credit card, wherever you get the secured credit card, you want to behave to, again, establish, a good history. Applying for too much credit all at once causes lenders concern, as I said, because they're afraid you might be what I call loading up, which isn't what most of you thought I meant by the word loading up. I got kids that went through college, so I know what loading up to them means. So are you looking to prepare, to take on too much debts? That's what causes the lenders to be concerned, because they feel they might be a little bit at risk.
I have a question about that. It's me. Applying for too much credit all at once. What if they send you invitation and they say you've already been approved for so many, like $5,000 credit for a Visa card? Is that invitation?
That's a good question. Now, if you get invitations, and when you get a good FICO score, as this lady has, lenders, the creditors, can run a report through FICO, and they'll say, give us all the people in the community that have a score of over 800. They'll get a list of names and addresses, and then these banks, normally it's banks, Bank of America, Chase, Wells Fargo, will do a mass mailing and say, just sign this and we'll give you a credit card with a $10,000 limit. Because why? They know she's a good risk. They know what her score is already. They don't have to even verify her employment. They know she's a diamond to that bank. So those are pre-approved offers. And so if she takes them, it doesn't adversely affect her credit at all, because they've already extended her the credit. They've already run a report on her, a profile, to know that she's creditworthy.
So just as an example, say like you get all these invitations and like you have like maybe 7 or 8 and you say, hey, I'm gonna take them all. So that doesn't really show them, that doesn't really tell the lender that's kind of cautious because they've been pre-approved?
It doesn't, because they've extended the offer to you. But again, you don't want to, in my opinion, you don't want to carry a lot of cards, because that can impact your credit negatively. It has the potential to. It may not, but it has the potential to. So if they're making you offers and you see, sometimes, and I get these in the mail too, some of these banks will send me an offer, here's a card, and if you spend $200 over the first month, we'll send you a gift card for $50. So I'm like thinking, well, this is stupid proof. I'll go buy a pair of shoes, I'll pay it off, they'll send me $50, I'll close the account. I mean, that's $50. I mean, $50 is $50 any way you look at it. So sometimes, look at the offer, see what they're offering you, see what the rates are, see what the terms are, and it might be cost effective to get the card, even if you only keep it for a short period of time.
Then don't you have to pay capital gains on that $50 after?
I'm sorry?
Then don't you have to pay capital gains on that $50 after?
I don't know what that number is anymore, because it keeps changing, but they'll usually tell you in the offering that they're going to report it as income to you, so then you would know.
Then they'll send you a 1099.
Don't you have to be careful with those cards though, because if you look at the fine print, they're actually kind of suckering you into paying a high interest rate. Like those ones that I get pre-approved, they seem to have the worst rate, like the highest rate.
Well, this happens, especially, I'm going to get to that in a minute or two, but I'm going to address your question now. Sometimes a credit card company will send you an offering. Open up a credit card with us today, and the interest rate is 0%. So you jump all over it. And then if you read the fine print, and nobody does, because we're too busy, right? If you read the fine print, it says after 3 months, the rate goes to 25%. Now, I have employees at the credit union that I call it gaming the system, and it's perfectly legal, just like going to Vegas. Gaming is legal at the casino tables. But they'll read the fine print, and they'll move their cards all over the world at 0%, but you have to keep a good calendar, because when they change the rate on you, they change the rate on you. Now, if you keep a good calendar and you're well disciplined at it, you can move your credit card balances, up and down the street to all these different banks and maintain the 0% rate. To me, it's an awful lot of work. and we're so crunched for time, I don't have the time to do it. But the banks recognize it because they know at one point you're going to miss the date, and then they'll grab you at the 25%. And they know 1% of the people will game them, but they're going to make it up on the other 99%. And that's what they're counting on. Yes?
I have a question. Actually, I heard it affects you negatively if you close a credit card account. Is that true?
It doesn't affect you negatively if you close the credit card account, but it does affect you negatively if the bank closes your credit card account. Because if they're closing your account, there's a reason for it. A bank can't just arbitrarily close your account. They're closing it because you're over the limit, you're missing your payments, you're not complying with the terms, your payment history is sporadic. That will seriously negatively impact your credit. But you can close your account and it won't adversely affect your credit profile unless you're closing the account for some purpose that would put the bank at risk. Maybe you ran charges up on it Friday, you told the bank to close the account on Monday, the charges from the rent-a-car won't come through until next week on Tuesday, and you faded off into the sunset. But there's a lot of all these kind of urban legends about if you close the account, it'll adversely impact your credit. That hasn't been our experience.
How often you can ask for the balance, increase the balance? So
Well-
what affects, is it count as an inquiry?
It's with different banks. In other words, Bank of America may offer a 0% rate if you do a balance transfer for the next 6 or 9 months. And then after that 6 or 9 month period, the Bank of America rate might go up to 20%. So if during that window you see all of a sudden Chase is offering something, you can move it out of there. It's not against the law to transfer your balances. The bank.
I'm not talking about the transfer of the balance. Asking to increase
Could we
the
hold our
balance.
questions until you
Request-
finish, Stuart?
I'm sorry?
Could we hold our questions till you finish,
Okay.
so that we could kind of get?
Okay. I'm going to power through here real quick. This is a great slide, and I'll tell you why. You're watching commercials, it goes freeannualcreditreport.com, and you go on this freeannualcreditreport.com, and you end up paying $15 a month. This is free. You're entitled to one free credit report. If you don't take anything else away, take this away. One of my favorite 4-letter words, free, F-R-E-E. You're entitled to one free credit report each year from each of the 3 credit profile agencies, TransUnion, Experian, and Equifax. This is what I do. Every 4 months, I run a credit report from a different agency. And so if I do that throughout the course of the year, I got 3 free credit reports, right? When they say you're entitled to one free credit report. Well, you are entitled to one free credit report per agency. So I have it on my calendar. Every 4 months, I run a report. This, I think, is important. First of all, it's free. It doesn't cost you anything, and it doesn't impact your credit score. It doesn't adversely affect your credit score to run a free credit report. The federal government imposed this on the bureaus. They don't like giving it away for free. But they impose it on the bureaus because the bureaus make a ton of mistakes. They have entry-level clerk typists. They work them like slaves. They don't pay them enough. And some of them are dyslexic. So all of a sudden, your social security number becomes yours, and your birthday becomes hers. And especially if you're a junior or a senior, now you've got dad's credit, and dad's got your credit. And so by running a report every 4 months on your bureau, you can see the history on your account, and if there's anything up there that doesn't belong to you, there's a way to dispute it for free. You can say, you, for example, I don't shop at Victoria's Secret. That's not my account. So you can dispute it with the bureau, and they have to take it off of your report if they can't document that it's legitimately yours. So, And that's the website is annualcreditreport.com. Don't type in from the commercials freecreditreport.com. They're gaming you to collect money for what is otherwise free. Now, what this won't tell you is your FICO score, because they want to charge you for it. But I can guarantee you, if your credit report is clean and it's not showing late payments and derogatory history, I can guarantee you have a good score. And really, that's all you need to know. If you got late payments and bad history, then you're not going to have a good score. And at that point, you don't need to know how bad it is. Just go try to get a loan, and you'll find out. Again, like I said, 1 year later, you can go to your lender that's holding your credit card and tell them, you want to get a fully unsecured card. Generally, as I said, if you've been behaving and paying monthly and on time, they'll take the security off, release the funds. If you're not behaving, they'll either close the account or tell you need to keep the funds on deposit. Okay, this is one of my least favorite words, and it's lease. I think it should be against the law. They should call it rent. If you go to Hertz Rent a Car, you rent a car for a week, right? And you pay $25 a day to rent the car. Why don't they say that with lease? If you go down Brown Boulevard or any boulevard with dealerships, they're going to say, hey, get in this car for a 3-year lease, $450 a month. But it's not really a lease. Why don't they tell you the truth? Rent this car from me for the next 3 years, because that's what you're doing. You're renting a car from the dealership for the next 3 years. Now, if you think that's a good idea, Brand Boulevard's waiting for you, okay? And I'm not taking anything away from the dealerships. They're entitled to make a living. I'm not certain for the consumer, for the average consumer, renting a car is a good idea. If you need to be seen in the bling in a late model car every 2 or 3 years, you need to lease a car. My car is 18 years old. It's bought and paid for. I haven't made a car payment for 15 years. And I don't plan to. I'm going to buy a new car every 25 years if I need to or not. Yeah.
Well, if, like, when you lease a car and you're done with it for 3 years, can't you pay like the other half and then it'll be yours? Will they do something like that?
Rent to pay, rent to own.
Well, let me go through this slide, and it might answer your question. Okay, so again, to me, the word lease, whenever you see it, go to rent. Do you want to rent this car? I'm showing you, here's an example, because you can get a 3-year lease, you can go down Brown Boulevard, they'll put you in a car in a 3-year lease, $450 a month. After the $450 a month for the 3 years, what did you pay them? I did the math, trust me, $16,200. And then after the 3rd year, you are going to return the car to them. And so what do you have? You've got a drawer full of receipts. So you've got a drawer full of receipts, nothing to show for it. Now, if you went to the credit union, like this lady does, and she's got excellent credit, I'm going to loan her $15,650 at 2.25%. That's our best rate today for people with the best credit. If she does a $450-month payment for the next 3 years, the car will cost her $16,250. How much money did I make? The nasty lender. On the 3 years, I made $550. Big deal. But what happens after the 3 years? She owns the car. She owns the car. She's not making any more monthly payments.
I did borrow from you guys before.
All right.
For car.
So if you take nothing else away, seriously take a look at leasing versus financing. Generally, it's better to finance the car if you can, you know. What I didn't even discuss on these leases is usually they require money from you too up front. So it's not just drive off of the lot at $450 a month. They'll say, give us $1,000 and we'll let you drive off the lot at $450 a month. And we might do the same thing too, but at least the $1,000 is your down payment. We'll apply it to the loan. So, I mean, why do the dealers love leases? The dealers love leases because it's a continuous loop. After the 36-month lease, what do? You return the car. You recycle the car. They repeat the lease. They take the car that you just returned, and what do? They sell it to somebody else down the street because there's still value in the car. This is why dealerships love leasing. I'm not taking anything away from them. That's just their business plan. There's more money to be made leasing cars than selling them. There's not a lot of margin in cars. People think you can go down to Brand and it's a $20,000 car. You can chisel him down to $15,000. There's not that much profit in that car. There's just not. I wish there was, because then I would tell you, drive them down. Drive a hard bargain. Drop the hammer on them. There's just not a lot of profit in the cars, but there's a lot of profit in that lease. There's a ton of profit in the lease, and that's why all these commercials are lease this, lease that. Using credit's not easy. I talk about it. It's not easy to manage it. It does require a little bit of discipline. Remember, it's a loan. You're making a promise to pay the money back. It's a promise. It's not, I'll try to pay you next month. We have some of these members, I'm a little short this month. Well, no, you promised on a contract with the lender to pay each month. So telling me you need an extra, 45 days, gets the lenders upset. And I'm speaking for all the lenders. It doesn't matter where you go. The lenders want to get paid back. That's part of the bargain. They extended you the cash. They want to get paid back. On credit cards, watch for interest rates, teaser rates we spoke about. They'll start you at 0%. They have to disclose how long that's going to run for. 6 months, 9 months, 6 weeks, 6 days. I don't know what they're doing. We don't do it. I think it's a scam, and I think it's a disservice, and I think it's a hustle. It's a way to kind of falsely loop you into their product, and then when you're least expecting it, they'll drop the hammer on you and you're at 25%, which is not, we've seen these rates because sometimes our members will come to us and ask us to get them out of a bad deal, and we see the interest rate at the other lenders, 25%, or they're paying horrendous annual fees to carry a credit card, or if you're late, the late payment fees are, exorbitant. On credit cards, what you can look forward to once you've established good credit is, frequent flyer miles, extended warranties, convenience checks. You can get reward points. There's a difference between a fixed rate credit card and a variable rate card. Some variable rate cards will start you out at a low rate, and then when interest rates go up, and guess what? They always do, then your payment goes up. So try to look for a fixed rate card. That's all we offer. Because again, we just think, for us, it's about not ripping off the consumer. Our approach is to try to help the consumer. Got overextended, don't spend more than you can afford, be credit responsible. That will establish a credit profile. Now, what if you get bad credit? You miss a couple of payments, you're overextended, you max out your card. That will stay on your profile for 7 years. And you'll see agencies telling you, call us and we'll clean your report. Don't fall for it and don't pay them the money because it's a scam and it's a ripoff. They cannot go in to any of those bureaus and cleanse your report. What they will do, I'll tell you what they do. They'll have you fill out a dispute form that says, I wasn't late on my Sears credit card. I wasn't late making a payment to Pep Boys. And so they'll send that to the credit bureau company that reported you as late. They in turn have to go to the merchant, Pep Boys, and say, hey, Joe's disputing that charge. He said he paid it on time. You think Pep Boys has a lot of time to go through all those things? So they give it to some overworked guy in the back office that doesn't have time for it, doesn't respond. He has to answer within like 30 days. He doesn't get back to it in time. Now it pops off. So you can clean your own credit report if you want to. If you're late, and you want to challenge it, write to the bureau and say, I wasn't late. There's a 50-50 chance that the bureau, like Sears, won't even respond because Sears is just so inundated that they'd rather be selling shoes and watches than report the fact that, yeah, Joe was legitimately late. They'll just say, you know what, let it go, it's not worth it. So that's just a business model at Sears and some of these other places. But these bureaus, these commercials that say they can make your bad credit go away, it doesn't happen. Bad credit, if you have a bad credit profile, chances are you'll get denied credit going forward, or you'll pay a high rate going forward at your lender. And when you go to buy a car with bad credit, our interest rate, if you have bad credit, is 17%. Bad credit versus 2.5% with excellent credit. So, I mean, you can do the math. The other thing where we were talking about paying in full versus not. This is something the credit card companies, all of them do, is they'll say your payment's very low. What they'll do is they'll say, if you, let's say for example in this situation here, your balance is $1,000, they'll say your minimum payment is 2.5% of the balance, which isn't much. But if you make that minimum payment, I did the math on this, let's say you ran your card up to $1,000 over the course of the month buying stuff, buying groceries, going to dinner, going to the movies, maybe going to Vegas, spending a couple of nights there. If all you do is make the minimum payment on that credit card, it's going to take you 153 months to pay it off. 12 years. And what are you going to pay the bank? You're going to pay them more than you borrowed. You're going to pay them $1,115 in interest. Now remember, you only borrowed $1,000 while you were in Vegas having the time of your life. Now, like I told my daughter who did this, was it worth it? She had the time of her life on one weekend, blew through $1,000, going to the shows, eating like the queen, and she financed it for the next 12 years. Was the dinner worth it? I've never had a dinner that's been worth financing for 12 years. And I'll tell you, either has she. So, lesson learned. But this is the minimum payment trap. And we do it too. Although we tell you you need to pay at least 4% a month because we want you to get out of the debt sooner than later. But most banks will set it down lower because there's more money to be made. How to get out of the trap? Make more than the minimum payment, because anything over the minimum payment has to reduce the principal balance outstanding. So if the minimum payment's $25, you owe them $1,000, and all you have is $50 for the month, send them the $50 because it's to your benefit. Otherwise, you're paying finance charge, and this is, every time you go down the street, you see those big banks, you paid for them. You paid for them. Okay, banks didn't put those buildings up from selling key rings or keychains in their lobby. They got it from interest. So like I said, pay more. Even if all you can pay is a little bit more than the minimum, do it. Avoid paying annual fees. We don't charge them. At our credit union, find the lowest rate card. Our lowest rate card is 9.9%, which appears high, but go to B of A and see what their lowest rate card is, and it's going to be twice that amount on good credit. Because this is how much money is to be made on credit cards. What happens when interest rates go up? That's the problem, that's the gamble you take on a variable rate card. How is interest charged each month? Some lenders charge you the minute you buy a pair of shoes, you owe them interest. Most of them don't. Some of them do, so you got to read the fine print. We give you a grace period, so if you are buying product in the month of May, we're going to send you a statement May 25th telling you what you bought actually for the previous month of April, and then we'll give you 25 days to pay that off, or you can pay the interest at, say, 9.5%, 10%. So take a look and see what the interest charge is. If you need fast cash, sometimes you do. Is there a cash advance fee? Most banks charge a cash advance fee. So if you want $100, you need cash quick, they'll charge you 5%. So you put in for 100, you end up with $95. That's not a bad trade. I'll do that every day. We don't charge a cash advance fee. You know, we just don't do it. So I'm not going to say how straight and ethical we are. We just think if you need a cash advance, we'll charge you the interest. The minute you take the advance, the interest rate's say 9–10%, but we don't fee you on top of it. We feel clipping you on the interest is sufficient. Look for reward points on credit cards. You'll earn points, and then you can get, you can go to our website, you get gift cards or gas cards, airline travel. You know, I had one member, you know, she ran her card up to the max in 30 days. I said, what'd you do that for? She said, well, I got this cash gift card, now I'm going to make the minimum payment. That's the joke. It doesn't work, right? It wouldn't work that way, because her credit line's not going to increase that much each and every month that she can use her cash gift card to make the minimum payment. It's not a good way to do business. Checking accounts. We offer checking accounts. There's no minimum balance. There's no account fee. It's free. Does it pay dividend? Our checking accounts will pay 1.75%, which is a pretty good rate in this economy. Home banking, we offer it. Most banks do. Just make sure you're not paying for it. Bill pay, we offer it. It's free. The ATM, the debit card, free. Now, be careful, because sometimes you'll say, well, you know, Glendale, you know, you only have an ATM card at the bookstore, I mean the ATM machine at the bookstore and at your credit union, but we're on a network of 30,000 free ATMs, 30,000. Bank of America has less than 20,000, so you do the math, what's bigger? Every 7-Eleven store you can go to and do transactions at that ATM machine with our card. It won't cost you a dime. The difference between credit unions and banks, we're not for profit, banks are for profit, so banks have to pay off Wall Street. We don't. We have to pay off the members. This is true of all credit unions. They have to pay off the members. You are the member, we have to pay you off. How do we do it? Generally speaking, lower interest rates on loans and higher deposit dividend rates. The Bank of America, Wells Fargo, Citibank, I pronounce it differently at other places, but I'm going to keep it clean here. They have to pay off Wall Street. The Wall Street stockholders expect to get paid. The only way they can pay them is to stick it to the customer. So that's the recap. Look for no minimum balance requirements for a checking account without monthly fees. See if they have free bill pay and home banking. Look for the free ATM access. Again, that's one of my favorite four-letter words. Your checking account should be free. If your bank is currently charging you to carry a checking account, you should seriously look at closing it. It's your money. B of A tried that not too long ago. They were going to start charging everybody $5 a month to have a checking account. Why would you pay me $60 a year to write funds against your own money? I mean, for them to even do it was criminal. Anyway, I might have gone over my time. If I can answer any more questions. Yes?